Yeah, such a good question. Ugly truths that 2020 has revealed, I think. It's my answer when people ask me what's the biggest financial mistake that I see dentists make. Now, I've been a financial advisor for almost 14 years now,
Mm-hmm.
and my answer continues to be that dentists typically are just really unorganized and make what we call random acts of finance.
You're busy, you've got a decent practice, but nobody wants to be decent. You want to be great, and you want to have a great practice. So how did the most productive, profitable dentist in the nation balance real life, work, and profits, and somehow make it all seem fun? Well, it comes down to simple, everyday practices. So grab a lunch, join us as we chat with top clinicians and influencers to discover their formula for uncommon success. Are you ready? Then it's time to explore everyday practices.
Welcome to Everyday Practices. I am your co-host, Reagan Robertson.
And I'm your co-host, Chad Johnson.
Now I have to do that over again.
No, we're not doing it over again.
That was aggressive, Chad.
Thank you. Megan, who do we have on our podcast today?
We have a special guest on our podcast today. Oh, Chadwick, I adore you. Co-founder of Dentist Advisors and co-host of the Dentist Money Show. So we have a fellow podcaster today. Ryan Isaac is a trusted financial advisor to dentists across the country as a regular speaker at dental events nationwide. Maybe virtual events now.
Virtual.
Right? Ryan shares his expertise in portfolio management, debt reduction, tax management, retirement plans, profit sharing plans, and insurance. He is a CFP with deep financial planning expertise and has been a major contributor to the growth of Dentist Advisors, which includes development of the Elements Planning System. Welcome to our show, Ryan Isaac.
That was a lot. I have a question for you guys. I don't like reading people's bios to them, but what's more awkward, having a bio read to you about you or bragging about yourself?
Bragging about myself.
I'd love bragging about myself. I'm just going to write my own bios and have people read it. It's going to be spectacular.
I always feel like they're always reading me a list of things. I'm like, that sounds way cooler than what I really am. I would just rather just say, hey, I'm Ryan. Let's chat about stuff. And then we'll go from there. That's how it goes. But thanks for having me on. I'm excited to be here.
We got to establish that authority early on.
There's authority. Ryan. All right. We got authority here. And I will say also that I did wait my turn to insert my name into the intro, unlike Chad.
And I'm
aggressively jumped in.
I'm Brian Fellows.
As if you wouldn't have a chance. You were like, wait, I'm Chad.
You know what? We're 100 some episodes in. I've never done that. But just for the shock value, I did
commemoration.
So shenanigans are not over, but let's go move on to the next one. So
let's do it.
Ryan, we've got some questions what are in 2020, the last 6 months, what's some ugly truth that the last 6 months have revealed for dentists?
Yeah, such a good question. Ugly truths that 2020 has revealed, I think. It's my answer when people ask me what's the biggest financial mistake that I see dentists make. Now, I've been a financial advisor for almost 14 years now, and my answer continues to be that dentists typically are just really unorganized and make what we call random acts of finance. That's what we call it. So, typically there's high levels of income. It's pretty steady and consistent, but there's just a million places where a dentist can throw money. So I think 2020 revealed that continuing issue with a busy, successful, high cash flowing dentist, which is, if you're unorganized and you're throwing your excess money at random things month in and month out, depending on your emotions for that month, maybe you're just in a really particular student loan hating mood that month and you got the extra 10 grand in the bank account. What are you going to do with it? You're going to throw it at the student loans just to feel better. Not because there's any strategy, because it just feels good. Or the next month might be, I don't know, the cabin down payment, or the next one might be a race car that you've just always wanted to buy since you were a little boy, like a Mach-E Ford Mustang.
Yes, a black one, a GT next summer.
Not that you know about this, not that that's very specific, hypothetically speaking only. But yeah, I think it exposed just people who are not organized and who are making random financial decisions. But that's pretty general. I would say it exposed people who aren't very liquid too, who weren't preparing well, having enough liquidity in the business, having a personal emergency fund, prioritizing getting rid of cash over building liquidity. And that exposed a lot of that for sure for a lot of people.
Ryan, do you find that that people that it matched up with their risk tolerance? So, for example, if someone has a high risk tolerance and they really lost out big in 2020, and they kind of said, "Well, that's just what happens," and then there's other people, that might have lost a little, but they do not have any risk tolerance. They're quite risk averse, and so then they realize, oh crud, I was chewing off more than I could swallow, that I was more in risk than what I realized. Did that happen?
I think it happened in different ways. Loss is an interesting word. If we're talking about a business, for example, I don't know. I personally haven't met, although I've heard the stories, you guys maybe know, of dentists who lost their business over this. There's probably maybe some older dentists who are close to retiring anyway, and they're kind of just like, yeah, this is a pretty good exit point. This thing's messy enough. Let's just call it good.
Yep.
And so that, but I wouldn't count that as a loss. When we talk about public markets like stocks and bonds and mutual funds,
yes,
loss is always a funny word, because unless you've invested money in a really undiversified, overly concentrated, maybe too risky, let's say you went and you bought some
Bitcoin.
Yeah, which isn't even the stock market, right? So that's a whole other asset class. So unless you put your money, I guess we can, speaking generally, unless you put money into something that was very concentrated, very specific, that had the potential to go to zero and stayed at zero, then no one really lost anything. Like stocks are interesting. People think you lose money in stocks, but that's not really what's happening. Especially
it's assuming that you're cashing out right now.
If it goes down, but even then if you cash it out when things go down, but that's like any asset. That's like a house. We were just talking about owning real estate and, buying at peaks and then having like negative equity. And if you sold your house when it's, 20 grand under, then yeah, you lost some money. But no, I don't think it's more loss, but your question about risk tolerance is really interesting, because I think a lot of people did find that they held less liquidity. And by liquidity, I don't mean just checking account balance. I just mean access to money that you can get at without a penalty. They held less than they are going to in the future. So in the past, people would be like, I'm good with half a month's of expenses in my practice. Now they're like, I want 3 months of expenses. So yeah, risk is a great question.
Mm-hmm.
Wow, this is really interesting, because when kind of backing up a little bit, you talked about not going into it with a strategy, and we were just talking to our productive doctors the other day about marketing tactics versus a marketing strategy, and how doctors tend to throw money at whichever salesperson makes the most compelling argument for a website or SEO or direct mail. So it doesn't necessarily fall into an overall strategy. It just goes to tactics. So, yeah. How do you back up knowing what you know with that, and saying that, dentists are rather unorganized in that? What first steps did they take to become organized and get their finances into an actual strategy, as opposed to whatever I'm feeling at this moment?
Yeah. And we all do this with like diets and exercise too, don't we? We just we go find the account on Instagram. You're like, well, probably should do that booty workout for the next 30 days. And that's probably, instead you got to back up and you got to evaluate things more basically, So in the context of a dentist and strategy versus tactics, that's a great way to put it, by the way, because that's like, especially financially, that's the most compelling thing that we want to do. We just want to implement tactics, right? It's like, what's the investment I should do to retire? Like, what, where should I put money? And it's like, well, let's back up. Let's say really basic things that you'd think would be a given that everyone's doing, but no one's doing this. So what did you earn last year? How does that compare to the previous year? What do you spend in a month at home with your family and your spouse? Is it too much or too little? Does your net worth even grow every year, or is it flat? There's just like all these little measurement things that those matter before you determine what tactics, what's the highest highest returning investment I should do. Should I do the market or real estate, or should I build a DSO or stay at one location? Those are tactics of implementing a plan that starts with the basics. And I find that most people don't measure the basics because it's not fun. It's not exciting,
So wait, there are booty workouts on Instagram?
That's what Chad took out of this. Yeah, man.
I heard booty workouts.
I'm pro booty, man and woman. I think everyone should work on building
Most
a big
people have
booty.
them.
Yeah, everyone's got one. You should take care of it at the very least. Is all I'm saying. Okay, I'm pro. Take care of your
That's
booty.
kind of one of the core essentials to CrossFit. It's like why you do squats, Yeah.
That's why you squat. That's why everyone's got little bands around their knees and doing like hip thrusts and
Right.
I've invested in the
lunges.
Instagram booty workouts.
That's what I'm
so
talking
I take
about.
that personally.
Everyone knows. Hey, there's always a day a week dedicated to booty development. And
No one's
growth,
gonna believe
That's right.
me, but on my Instagram, like, because I'm not on it all too
I'm
much.
glad
but
we're on this subject, by the way. I'm so glad how fast this deteriorated.
went to booty. Yeah. Is this called a booty call?
Yeah, it could. Man, that was a best dad joke I've heard all week. That was great. That's awesome.
Well, pulling this back to dentistry,
Thank you.
I think
Let's go back. Reagan,
Fine.
yeah.
I think it's really interesting. A lot of the doctors that I've seen over the last decade, I do hear their production goes up. They don't necessarily take home anymore. So it feels good to make that top number, but they're not pulling it down.
Yeah.
And thinking about the last 6 months, there's been a lot of shifts. I've seen associates going into buying their own practice now, and then I've seen dental owners selling, and then I've seen dentists taking the opportunity to buy more practices. So what is with regards to strategy, is now the time to buy more practices, or is now the time to invest in, I don't know, Google or Tesla or Amazon?
Yeah.
I mean, what should doctors be asking themselves? What unsexy questions, Ryan, should doctors be asking themselves to get their mind frame in that long-term planning?
Dang, I was going to ask you guys are the practice experts. I was going to ask you if now's the time to build and buy, but no, my personal philosophy, and I think this is good for people, is, I mean, if you're early or mid-career, you still have like a decade plus, I still think you should move ahead with your plans as you are planning to do them. I have a lot of clients who are in the middle of moving to a new building or acquiring the second location or bringing on the partner or the associate. Things like 2020 might shake up how you go about them, or they might delay them a little bit. But I think if you were prepared to do the second location anyway, and you're financially ready for it, and from a business perspective, like your systems and your processes and your management, all this stuff, like you're ready to do it, just because we get a hiccup in the economy of the world. And well, I don't want to call it, I mean, it's more than hiccup. This might've been like a vomit this year. 2020 wasn't just a hiccup. It was worse than that. But I just don't think that should change your 10 or 20 year trajectory or plan. It might alter slightly the time frame or the way you go about it. But I wouldn't agree with someone who's like, oh yeah, I was totally ready to move and expand, and I'm busy and we're advertising, we're just like totally nailing it, but now I don't want to do that anymore, and I'm just gonna not do it. I still think that if you were ready for it anyway, you should keep going, especially if you have the time. Now if you're like 5 to 7 years out from retirement, I mean, you probably should be second guessing your giant expansion plans anyway. But anyway, that's just what I think.
Good. So I have a question. So, a lot of people I should say dentists talk about Dave Ramsey, and it's controversial because Dave Ramsey hits a big, broad market, but we're a different beast. And I at least get that, you can take home some messages from him, and I adore him. But at the same time, I feel like sometimes dentists can break the Dave Ramsey rule. And I think if I found him in a private room, he'd say, Chad, listen, I can't say it out loud, but of course you can break from those rules because you're not the prototypical household. So he says that you should be, your own financial advisor. In other words, like you should be overseeing your stuff. So is it wrong for dentists to, have dentist advisors do their advising for them as opposed to us looking over our own work? What's your thoughts?
Well, first of all, full disclosure, I was a Financial Peace University student myself of Dave Ramsey's course. I've seen him live through it early in my marriage, and I thought it was insanely helpful.
Right.
I thought it was awesome, and it was a fantastic place to start. But even I fit the mold better for Dave Ramsey than a dentist does. I mean, the truth is that, especially now, I mean, man, the students coming out of dental school have more dental debt than most people have on like any mortgage they'll ever have. I mean, the average Dave Ramsey caller is calling in with like a $60,000 mortgage. And I'm always like, where do you guys live? First of all,
I was just going to say, where do we need to move?
where am I I'm totally clearly taking a wrong turn somewhere in my real estate decision making. But also, I mean, it can't even begin to apply that, because his philosophy is pay off all your debt before you do anything else in your whole life and bootstrap all of your decisions. Like, you can't
pay for school as you go.
Yeah,
and dentists can't do that, for example.
So dentists will never graduate dental school, and you will be an associate until you've saved $700,000 to buy your first practice at age 62,
right?
And then you buy your practice. Like, it just breaks the model, like you said. A dentist completely breaks the philosophy, and it simply flat out does not apply. But shout out to Ramsey for what he's doing for the general population,
of course.
And I mean, I think we all know, being involved in businesses, hard line take is good for marketing.
Yeah,
so,
and there's still some good overall principles to it.
Totally believe in
right.
that. I mean, you can still take his principles and go, okay, we're not going to pay off the student loans before we buy a practice, and we're not going to buy a practice out of cash flow, out of our income. Like, we're going to have to get a loan to buy a practice, because that's ludicrous.
Right.
But maybe some of the principles, and you get rid of some credit card debt.
Or paying off your smallest debt first.
Or paying or yeah, I mean, man,
right.
we help clients debt snowball all the time, right. But we're more interested in some other more consequential decisions before we get to that point. But
yeah, so I think enters dentist advisors. How are you guys, helping dentists versus when we try and
I didn't even
help
answer
ourselves?
Your question.
No. Right. It was getting to it
for me.
It was getting to it.
I start talking, I get lost. So
nope, it was good in and of itself.
Well, it's a really good question. If you look at the question is, are people better off making their own financial decisions or not? I think some people are fine doing it. And honestly, like, good financial planning it's not incredibly hard to understand, but it's just time consuming, I mean, I will tell you that the average dentist should be spending, or someone should be spending, probably 25 to 30 hours per year on a dentist financial situation. That's organizing, tracking, monitoring, talking through decisions, weighing outcomes and consequences. That, I mean, it could be several dozen hours a year that, I mean, who's going to spend that time unless you're just super into that stuff? And that's not many people, But I think we can answer the question by just asking, are Americans in general financially healthy? Are Americans in general physically healthy? Like, human nature is, we don't make progress in things unless we've got a third party person holding us accountable to hitting goals and targets. We're just not good at sticking to things, which is and it's how you achieve something. You just stick to it for a long time. So I do believe I've met a minority of dentists out there that are smart enough, and they're going to spend the time and they have the interest in doing their own planning and investing and tracking and all that kind of stuff. But I still highly personally believe in hiring an outside person to help you achieve goals, even at stuff you're good at. I totally buy into that philosophy for myself personally, and I believe that about other people, and totally translates to finances. And if we look at like the ADA's data, you go, well, man, every time the ADA publishes a report of the average retirement age for a dentist, it just keeps getting later and later. Used to be mid 60s, then it was 67, now it's 69. I'll bet and that was a couple years old. So
great.
Yeah, is it going to be 71 now? Is it going to be 72? And the question is, are dentists working longer on average as time goes on because they just love it so much, or is it because they're not ready? And I would venture to guess it's because they're not ready. And it's
right.
So then I think that answers the question, should people do it on their own? I don't believe for the average person that the answer is yes. I think it's no.
I just thought I'd let you know, Ryan. I mean, for the audience's sake, for them to know too, for the first 14 years of my career was doing my own planning, because I just didn't trust anyone else. Like, I just felt like,
which is fair. Yeah.
Yeah. I just, like they'd say, hey, I've got this cookie cutter, and, real estate didn't work out for me. So now I went into this company, I won't name a particular, but like that they just decide to, like, I'm a financial advisor now. And I'm just thinking, I've read more finance books or had more discussions, than like you just got out of high school 3 years ago,
Yeah.
And it's nothing against youth per se. But when I watched videos with you, podcasts with you and Reese and the other guys, and then when I talked with Cody, I could just tell from your elements and everything, and then basing it off of principles as opposed to just, like, well, what we do is we take your money and then you give us about 30 years and trust us that it'll work out, and then we'll siphon off a little bit on the front end, a little on the tail end. And that's how it works.
Sure.
And it's just like, yeah, that's great and all, like, for other people, but I think I can do better. Yeah. When I got to you guys' stuff, I was just like, nope, this is it. This is, so like, it was a trust factor that I really bought into what you guys were preaching. And I just thought I'd say, like that for other listeners and whatnot, and they're, you guys aren't paying me to say that. I am a client, but it's because I chose to do so as a very skeptical, otherwise skeptical consumer of financial advisory. And you guys took the cake after 15 years of my shell was cracked.
Yeah. Well, no, and Reagan said it earlier. It's the difference between what did you say, strategy and tactic,
Yep.
And that, I mean, so much of the financial industry is just selling people on tactics, because that's where the money's at. I mean, truthfully, candidly, like, that's where the money's at, is if you go find a dentist who doesn't have a lot of like money to manage, or isn't willing to pay like a high enough flat fee to have a relationship, then you just sell them some insurance, because that's the only way to make some money off the average dentist, or a real estate investing plan or something. It's tactic and strategy and philosophy have to be the basis for everything, or else tactics are just, they're wasted. So yeah, I think that's a great point, man.
Wow.
Cool.
So in that vein, dentist advisors is considered a fiduciary, yes? And what does that mean for dentists?
Yeah, I was just nodding, and I'm like, no one can hear me nod. I'm on a video, yes. I was nodding, yes.
So yes, so right, Reagan.
Yeah. So in the financial industry, fiduciary is a legal term. It describes an actual legal standard of care that an advisor has to practice with a client. As opposed to the other legal standard, which is called a suitability standard. So those are the two in our industry. It's suitability and fiduciary. Suitability just means that if you, in a court of law, all I would have to prove is that the advice I gave a client was suitable. It's like good enough, It's like going to the dentist, and all the dentist is on the hook for is like, yeah, it was good enough, but like, was it the best, or was it their best interest, or was it the most helpful? Was it the thing they needed? No, it was good enough. It was suitable, And so that's how a lot of the financial industry operates. And that's where you have like salespeople who are in commissions for selling financial products. Fiduciary law means that in a court of law, you have to demonstrate that you did what is in the absolute highest best interest for a client, which you would think, like, why is that not shouldn't that be like the basic standard of?
We would hope.
You would hope. And, our Congress, the government tried to pass that through to try to make our industry become a flat kind of blanket fiduciary standard a couple of years ago. And that just died out. There's just so much money in selling financial products and incentivizing salespeople with commissions to do so. So fiduciary means like.
So wait, so you're saying that like when that law stuff, because that didn't really.
Remember that?
Catch my radar. No. So you're saying though that when that happened, that most people then, like these other companies thought, you know what, like, we'll just be honest. We're just honest that we're just suitable.
It's lobbying. That's 100% true.
That's
and
awesomely weird.
Some of the arguments coming out of that were insane. They were like, well, if everyone's a fiduciary standard, it leaves less options for a customer to pick from, because I'm like, wait, what customer, if they properly know what's happening to the advice being given and how it's being incentivized,
okay.
Can you imagine that conversation? The other person going, good point.
It feels like we're creating right now. If I said, hey, we need a new like little commercial line of little videos, it should just be like this whole video line of people giving good enough advice in all these different industries. Like, yeah, does that seatbelt hold if I crash the car? It's like, it's good enough.
Yes.
It's suitable.
Reagan, what is that commercial that's like that, where the guy
isn't there a thing?
Yes, where the guy goes, hey, and then the doctor walks in and the nurse says, hey, did you get your license back? And he's like, yeah, I just got it, reinstated. So where's the problem?
Yeah.
No, I don't really. I do not know that commercial.
But it's just like that, it's just, and it's kind of insane, but that's how, the financial industry was built on product sales and has evolved to more advice giving and being more transparent with the way that they charge people, So like our firm is what we call a fee-only fiduciary. It means we earn zero commissions or kickback from anybody in the entire industry around us. No one pays us anything but our clients, and it's transparent, and it's just a fee for our services and our time.
Don't you guys have don't you have an app? Don't you have like a free app?
That's debatable, and that's in the works. And like the answer is like yes and then no, and we're working on. So what you're referring to is we took our proprietary planning system that we built for dentists over the years, and we're turning it into some technology. So at various times we open it up to some beta testing, and to be honest, I have no idea if we're doing that right now or not, but we have, and we will, and then it'll be something later, and then so.
You can edit that out.
No, you edit it, or just like, that's a great, we're working on it. Yeah, what we're trying to do is take this thing that historically dentists have paid to engage us in, and the system that we run right now is ran on human time, which is more expensive, because there's multiple humans just spending hours on this stuff, and we're trying to pack all that down into an app and let a computer do it. But
one of the things that was different when I first saw Reese speak like three or 4 years ago, and compared to the other financial advisors that I've talked to over the years, was he had me calculate. It was in a session, and we calculated our own net worth. Nobody had asked me that before, and it was shocking. And luckily, I was sitting beside 2 other dentists whose net worth was as pathetic as mine at the time.
Sweet.
But it changed the trajectory of my whole my whole investment strategy, my life, and everything. I was like, wow, this really was eye-opening for me. And I remember, I believe I was a beta tester, I think, on the app. But I remember finding it was like your magic retirement number.
Your magic number.
Yes, find your magic number, and then you had to calculate it out. And that was also incredibly eye-opening to me.
So
and it got me thinking on a bigger picture scale. So instead of just making those small, quick decisions, now, like, for example, paying off my VW, which I was telling listeners, I was telling Chad and Ryan before, I was so proud of doing that because I just bought it, last year, 2 years ago. And so I was excited to do that, but it was a calculated reason to do that. I had taken out a loan. It had a certain percentage on it. I knew it was the right thing to do. And without dentist advisors, I don't know that I would have thought that way.
And thanks for saying that. It's really cool. That's what I'm talking about. Before you implement tactics, financial tactics, you need to know the basics. And you would think that that's like, it sounds like that's something that everyone would just know. Like, I know my net worth, or I know what my debts are. I know what my interest rates are. I know what my income is. Like, if you ask any dentist, what was your actual gross income last year? That's a hard number to pin down because there's so many moving pieces. But if you don't know those basics first, you just can't make smart financial decisions on top of those, and then everyone does it in reverse. They jump to the tactics and then they back into it later and be like, oh, I guess I shouldn't have put my money there because I don't even know what I make every year. And I don't even know what my savings rate is or how much I spend every month. And you just, you're just trying to get ahead of yourself. So that's cool. That's a great example. Like, if I were to tell someone what's something that they could do on their own, 2 to 4 times a year that would change their financial outcome, is just sit on a spreadsheet for 5 minutes, 10 minutes, plan out, what's your net worth? What's all the stuff you own, subtract all your debts, what's your net worth, and see if it's changing every quarter in the right way. Positively.
Hopefully the right way.
Yeah. Like, that thing alone will change the way you view your future financial decisions. And so if you can add another 11 or 12 of those kind of fundamental things into someone's life and constantly do that with them, then the tactics, they kind of elect themselves, it becomes kind of a no-brainer. Like, where do I put money? And should I grow the practice, or should I pay down debt, or which mutual fund should I pick? And should I do a 401k or a simple IRA? Those become so much easier to decide once you've done those fundamental things first.
Or Ryan, for example, Cody and I were just looking through my data, and not to get into the weeds of it, but the question was refinance the home mortgage, not refinance and stuff. And I had one decision, and Cody and my wife had another decision, and I actually acquiesced and went with their decision because I was just like, you know what? Okay, when we're looking at the big strategy, I know how I feel, but that is going to be wrong for the long run. So because why would I pay you guys and then just do what I want to do anyways, which I'm sure happens plenty, but I was just,
which could be, I mean, that's a suitable outcome too. It's suitability. No, but like, that can be a fine income. I mean, here's the thing about the way humans make decisions. Like, even if you end up making the same decision, at least you confirmed with an independent third party who's not emotionally tied into your decision making, who said, yeah, that's smart. You're thinking on the right track. And then you're like, oh, cool, I'm going to make that same decision. Or you run it past someone else and they're like, no, you're missing these pieces. And then you do change your mind. So,
or that 20 years later, you don't wake up and subconsciously go, oh, wow, I'd never thought about like addressing it. But the whole while it's like, well, you owned it. Like whether you made the decision to listen or not listen, it's like, well, we talked about it. So yeah.
Well, and it's tough, like the more successful a dentist gets and becomes, and the more goals they achieve in a practice throughout a career, more collections, higher profitability, bigger business, more income. You just have less and less and less time on your hands to do anything. And then it becomes a point where you're so successful that literally all you can do is a few tasks in the business and then go home and try to live your life, and not let that pass you by. And then you just don't have time to do dozens of other little things that maybe you could do when you were a new grad or something. So, and that's where a lot of the trouble starts.
Oh, Victoria is famous for saying the more successful you become, the more support is required.
That is and it's the smartest thing. I think of it like a teeter-totter. You begin a career and you've got time on one side and money on the other. And in the beginning, all you have is time and you have no money. And then by the time you get the money part that you wanted, now you have no time, and now you're looking back like, man, I just wish I would have, I don't know, hung out with my kids a little bit more and, spent more time working on something else in life besides chasing the money. But that's what happens. You achieve professional goals, then you just find yourself without time. And that's where people get in trouble is they have no time. They don't spend time on stuff. They get unorganized. They make tactical decisions before they even know strategy, and they don't run anything. They don't have anyone in their life to, talk about these things with. And then it's tough. And then we start going with gut feelings, right? Then we're like making all of our decisions on like, well, my gut tells me, like, how many people have gone wrong with that? Like financially speaking, I'm a big believer in gut instinct, like huge. I think it drives a lot of smart decisions in life, but it's pretty statistically proven that we're bad at that with financial decisions. Like we're not good listen to our gut creatures with finances and money. It's just stop doing that with your gut. Like save the gut for like relationships and love and other life decisions, I guess, but.
And is there caries at the bottom of the occlusal prep that you just did? Yeah. This is a dentist show. I'm trying to
bring it back to the dentist.
I'm laughing because I know what you mean, and I
know, right?
Hilarious.
Ryan,
choose.
I have some extra value that I'm going to bring to you today. You want to hear?
I like it. Yeah, I do. Yes.
So if anyone's listening to this, I want you to go to our Facebook page and help Ryan choose which color swatch on his back wall.
Can you screenshot this?
Yeah, I already did.
Yeah.
I already. Oh, okay. Hold on. I'm going to do one more. Ready?
I'll get a little.
Okay. Now, I want every listener to go onto our Facebook page for Everyday Practices. It's going to be on the Productive Dentist Academy Facebook page. And choose, do you like the lightest, the medium, or the darkest swatch on his back wall?
And can I throw in a bonus?
Yes.
I'm looking for the most neutral gray tone possible. These ones they're too bluish purple.
Do they feel a little cool or do they feel warm to you?
These are a little cool, which I'm fine with.
You might want some warm.
A little warmer, maybe.
Regan's into color theory, so.
Okay. Yeah.
He had very specific listeners. He has very specific call-outs to the colors. So there's one he said had a periwinkle undertone, which about blew me away. I don't think I've ever heard anybody see that.
That's the first thing that came to mind. But I'm glad that we've hit my color swatches on my wall, and we've talked about booty workouts on Instagram on this dentist podcast about a lot of things at this point. But
welcome to Everyday Practices with Chad and Regan.
Thank you, Chad.
You have to get ready for tonight, right? I mean, don't you have...
Yeah, so we've got a webinar coming up tonight. We do at Dentist Advisors, we're doing just monthly webinars. We kind of rotate through financial subjects. And tonight we're actually talking about, this will be irrelevant when this episode comes out, but we're talking about how to build an investment portfolio and, what are some like basic investment philosophies that you should understand clearly before you start implementing tactics with your investing. So yeah, we're hitting that tonight. But we do that every month. We're advertise pretty openly about it, and you can see it. We record them and post them on our website after at dentistadvisors.com, so it's easy to find.
Yep. Well, guys, thanks for joining us today, Ryan.
Totally.
I appreciate you joining us. I'm looking forward to seeing you in person again down in Dallas, Fort Worth at our next workshop whenever we have it. And
okay.
Regan, I hope you can enjoy a little bit of fall sunshine up in Anacortes. And
it is beautifully sunny today.
I can tell that.
We do have one more question.
Oh, yes, Ryan.
Let's hit one more.
Okay. Bacon or eggs?
Bacon all day long. Although hold on. I'm not joking. I eat between 10 and 12 eggs every single day.
So you're not an anti-eggite.
Not even close. I am a little anti-egg yolk, to be honest with you.
Fair enough.
You do egg whites?
I'm like an egg white person. It's mostly just because I'm trying to save my fat macros. They track this stuff. And I try to save it for other things I like better than egg yolks, like peanut butter
like
or
chocolate,
basically.
or chocolate covered.
So do you get the egg whites like in the gallon, like in the tubs?
I crack them and then I split them between the two hands, and then
you sacrifice the poor yolks.
Sacrifice the yolks.
Where did
waste.
They go?
I don't.
To
the
garbage.
garbage. Yeah. If anyone has a better idea for me, I'm going through 10 to 12 egg whites a day and then throwing away the yolk. So if you have any ideas for that, help me with my paint color choices.
All right, what's your
yolk choices?
What's your protein macro per day? Like, what are you shooting for?
Yeah, thank you. I'm glad you
100 plus
as well. So I weigh approximately 205 pounds. Last time I checked, I eat about body weight in grams of protein.
Yep.
And then depending on how I feel that day, I'm usually between 70 and 100 grams of fat, and the rest are made up in carbs, which usually is between like 150 and 300 grams of carbs, depending on the day.
Yeah. So you shoot for 200 grams of protein a day?
Yeah, protein a day.
Good for you. Heck yeah.
Tough to do.
It is tough to do.
It's really hard to do.
I think for most people, getting 100 is tough, let alone.
How many grams of protein does one egg white have?
Let's see, 4 egg whites will give me like 14 grams of protein. So, you're talking like 3-point thing.
So you're eating all day, basically.
I eat all day long.
Yeah.
Yeah, it's kind of sometimes a pain, honestly, when there's a busy day or when I travel. It's tough to do, but I appreciate.
Well, nutrition helps you stay on top of your game because you sure are.
I'm just telling you, I'm like it's probably just because it's the only thing I actually have in my life besides my job is like an actual hobby that I know anything about. But I think there's a giant correlation between, just how we like feel in our physical bodies and how we can, operate in the rest of our lives. And it really surprises me how many dentists physically burn out by the time they're in their late 40s. And it's pretty sad because career longevity is one of the best financial planning tools that dentists has at their, like in their control, So take care of those bodies, guys.
Ladies and gentlemen, that was an everyday practice by Ryan Isaac.
Thank you.
Boom.
Thanks for having me, guys.
Thanks, everybody. Thank you, Ryan. Thank you, Chad.
Bring your lunch or take us to the gym again next week to improve your everyday practices. Also, subscribe on iTunes, follow us on social media, and sign up for our email list. Now get out there and win with everyday practices.